All right, good morning, trade pros. Welcome to the morning market update for Monday, December 17th of 2018. It's George Papazov, Trade Pro Academy. Today is the last day of the, today's the last full week, rather. This week is the last full week of markets for 2018. And then we have the holidays coming up next week. We'll talk about that as we approach next week in our trading strategy. All right, actually, we'll start with the morning market fun fact today. The first half of December uh, tends to be weaker on a seasonal perspective as traders sell weak stocks or positions that they've been losing on to take a tax loss and realize it so they could use it for the year-end taxes. The second half of December tends to be a buying opportunity for institutional traders who start jumping in and buying stocks that are deemed to be cheap or on sale. That typically works. Now, when it doesn't, that's called the Christmas rally, by the way. When that Christmas rally doesn't work, the last three times it didn't were followed by three flat years in 1994, 2004, and 2015, and two bear markets in 2000 and 2008, and a downturn that ended in February of 2016 as well. So whenever institutional money doesn't show up mid-December after the typical sell-off early on in December, it fares very badly for the following year. And as of last night's report, of the last week's COT report, looking at institutional money, it really didn't look like they were buying anything. In fact, they were selling. So look out. There could be some trouble in equity land here. In overnight levels, S&P 500 is off to the worst start to a December since 1980. Previous day low on the futures was at 24 or 25.94. That was already broken overnight. We had a little bit of overnight momentum to the upside, about 13 handles or so, and that got faded. Overnight low is now pushing lower. The first target of the day is at 25.81 quarter. That's the S1. The S2 is at 25.60 half on the S&P 500. It's the second support, and sell rallies on the way down today. All right, oil prices up, but slightly. Overnight lows at 51.08. The previous day low at 50.84. Let me just have a look at oil. It held, yeah. So we held the previous day low, and prices above today's, or right now at the moment, it's right at the previous day close. I think we buy dips early on until we break the overnight low and previous day low, and then we just continue to the downside on oil. So we're at a very tricky spot. All right, the 2018 in regards to the U.S. dollar, the 2018 prior high happened on November 12th, and it hit 97.69. On Friday, we broke that level. We hit 97.71. So the U.S. dollar is on a new annual high, and it's an asset that's performed extremely well in light of other assets in the last couple months. All right, preliminary support level to the downside is 97.10, 96.57 below that. And I think if the Federal Reserve is going to hike rates this week with a dovish outlook, it's not going to be very good for the dollar. So we could be near highs or at the top of the range. But I still see some support below. So we're in a little bit of a tricky spot here for the dollar and currency traders. In Asia, Japan's up 0.6, Hong Kong's flat, China's up slightly, India's up 0.9%. In Europe, all markets across the board are negative, about half a percentage point down, and futures in the United States are holding steady at break even. So we're not seeing any big movements overnight in the futures. In fact, we're slightly lower now. Gold prices up a touch. Bitcoin has rebounded 1/3%. It's above 3,000, but just barely hanging on the skin of its teeth. I see Bitcoin breaking down about 2,200 as the next support level. All right, 10-year Treasury yield is flat. This morning we had the Empire State Manufacturing Survey. We got the lowest reading since May of 2017, so it came out bearish as well, helping equity markets push the new lows. New orders were down big. Shipments were up a little bit. Prices paid down big, and employment was stronger than expected. So a little bit of a mixed indicator, but overall, we got the lowest manufacturing number in a long time, and by a huge margin too. It came out at 10.9 versus 20 expected. So that was a big miss. At 10 a.m., we have the Arabic Housing Market Index. The reason I call it is because it's called NAHB, and I'm just kidding. It's NAHB, National Association Housing Board, or something. I don't know, something like that. And it's looking at the housing market index. 4 p.m. we have Treasury International Capital, or the TIC report. And what else do we got? In terms of this week, we have some really important economic data. Because it's Monday, we're going to review the economic calendar for the week. And I'm looking at Monday, Tuesday, nothing really important. Wednesday, massive day at 2 p.m. We have the FOMC rate hike announcement, economic outlook, dot plot, and press conference at 2:30. That's an elite trading event. We're going to be trading it with our elite members in the group live. That's going to be very exciting. So we have extended coverage of our trading room this week for the FOMC announcement for the Federal Reserve. That's on Wednesday. Thursday, we don't really have much, and Friday, we wrap up with some final GDP numbers and core durable goods orders. We got a pretty busy week ahead of us from an economic standpoint, and it's going to be interesting with this week and the Federal Reserve being front line and center. Donald Trump tweets this morning, "It is incredible that with a very strong dollar and virtually no inflation, the outside world blowing up around us, Paris is burning and China's way down, that the Fed is even considering yet another interest rate hike. Take the victory," he says. Um, so essentially what Donald Trump here is saying is he doesn't want to see a rate hike. He's not really being shy about saying that. He's saying the economy doesn't need another rate hike. A lot of institutional investors and bond fund managers are also saying the same thing, right? And we're not really that far from being neutral anyways. Jerome Powell in September said we're really far from being neutral, but far from the top band of the neutral. But we're actually closer to the bottom band of neutral. So it wasn't incorrect when he said we're far from the neutral rate, but that scared the market. And it's not any more correct now that he's saying we're close to the neutral rate because we're close to the bottom band of it. Just two different ways to say the same thing, but the market likes one over the other very clearly. All right, and that's what's happening. Very important. This Wednesday, we have a huge opportunity to day trade. So this is a great time to join us for the trading room. And it comes with a 14-day money-back guarantee. So literally, you could trade it with us. And if you don't like the approach, I mean, you're entitled to a refund. No questions asked. We honor that. Okay. With 7 spending bills set to expire this weekend on Saturday at 12:01 a.m., the government runs out of money, and they don't run out of money, but their deadline's over. Okay, and they do actually run out of budget money. But here's what's going to happen. So White House officials, Republicans, and Democrats are looking to potentially introduce a stopgap measure, which would temporarily push the limit higher for their budget or their spending in order to be able to pick up negotiations in January. Typically, there's been 14-day stopgap agreements. Sometimes there's been 30 days, but if they can push this into 2019, that's what they're looking to do. Democrats take over the House where they have more leverage now. So these negotiations will probably be more challenging in January, but I don't think that just because they haven't taken over yet, it's going to be any easier now. Donald Trump's trying to secure $5 billion worth of funding for the border wall, and he doesn't look like he's going to get that. He has threatened to shut down the government. This fight's going to go down to the wire. 12:01 a.m. this Saturday morning is when we would effectively have a government shutdown. The government runs out of money. They've maxed out their credit card. They can't pay employees, and they'll pretty much close the doors to some government offices that are deemed non-essential. Now, it's funny because you would think a stock market would behave bearish to that, and there's no really clear trend. In fact, some of the times when there's a government shutdown, markets have actually rallied. So it's not a disaster. It sounds worse than it is. The government shutting down. It's happened many times before, and as a temporary shutdown, it's not a disaster. The longer it's closed, however, the worse it gets, and we have been closed for over 90 days before. So it's not a massive thing. They're going to come to some kind of agreement, but they're going to not let this opportunity pass to make a show out of it. That's for sure. Okay, that's the current situation there. Malaysian authorities, this is actually huge. I think it's underreported, but this is a massive update that I think could send shockwaves through the banking industry in the United States. Malaysian authorities have officially filed a criminal lawsuit against Goldman Sachs, against a former partner of the bank, Tim Leissner, in connection with the 1MDB financial scandals, $800 million plus. The media reports, here's where it gets tricky though. So you say, you know what, the guy that was part of it got fired. Great. It's all over. There's reports that the top executives, as far up as Lloyd Blankfein, who's a CEO, were involved in this. All right. They had knowledge of it. And the partners raised $6.5 billion for the 1MDB fund on pretenses of lying. They created bond agreements that had intentionally forged information. That's a scandal. That has the ability to have massive consequences United States has brought charges against the two partners, but Malaysia is now charging the entire institution of Goldman Sachs. Look out, Goldman Sachs is going to be weak. XLF, the financial sector today, is probably going to get sold off on that. A lot of institutional money will exit that stock right now, especially because markets are weak. We're looking to end 2018. You have a lot of exposure to Goldman Sachs. This is a kick in the you-know-what. You just want to get out. You want to close out and say, look, I want to end the year, close the book. A lot of funds are getting desperate because their bonus is on the line. Think about this. Up until September, they had all-time highs. They were high-fiving each other. Just 8 weeks later, they're losing their bonus because we're down in negative territory for 2018. If you haven't returned any positive return for your investors, you're going to experience outflows. They're going to want their money back. That's a redemption. If they want their money back, you're going to have to sell some of the holdings you have to free up cash to pay them back. That causes selling pressure. A lot of institutions are under that exact same situation right now. That's why they're not buying. All right. So this thing has legs. It could get worse before it gets better. Look out to the downside today. I'd like to ask you guys in a poll, where do you think the markets are headed today? Pop that in the comments box. You guys might notice we're wearing a new shirt. Torio got it for us. Actually, that's a Christmas gift. Look at that. How humble and nice of a kid he is. He bought us Trade Pro Academy swag with his own money. We're going to rebate him somehow. Yeah, so it's good. So he's got one on too. Let me turn the camera. It might freeze. Has the pass. Look at that. Biggie. How come mine didn't come with bigger muscles? My shirt didn't come with bigger muscles. It's ridiculous. Sold separately. That's good. Yeah, Goldman's been down already. Yeah, I think the people knew that there were going to be some hardships. Yeah, yeah. Last week it was the weakest sector. So interesting stuff. Yeah, you guys keep an eye out on that. Trade pros in the room. Let's get started. Ready to trade, Vicky? Let's make some money today, buddy. All right, trade pros in the room. Let me give you some levels and some things we're watching. We just broke a very key level here that we got to watch, and we're going to retrace it in a few moments. So let's set up some trade opportunities heading into the open. I'll pass on to Victoria to talk about NASDAQ and then Boxy for the oil desk. All right, we'll see you guys soon. Thanks, Marky. Let's get started.